Welcome everyone in the new video. In this video we will talk about why the higher time frames are most important, why you should not ignore them. Even though you are trading in a 15-minute for the intraday and the 5 minute for the scalping or 1 hour for the short term trading, but you should also look for the higher time frames because it gives you the real picture that where price is heading to. Even though market structure works in the same in all the time frames, but higher time frames are really important. Now first of all, we will show you what is the market structure. Now whenever market is creating the higher highs, something like this, then we only look for a buy whenever market break the first low, and when market is creating the lower lows and the direction is bearish, we only look for the sell after market break the first high, because this is the liquidity points, and whenever market took out the liquidity, it moves in its real direction like this. Whenever market took out the liquidity of these points, market moves in the opposite direction. Now we can see that in the charts. Okay, as I said that the higher time frames are really important. Like this is a 4 hour time frame and you can start marking the structure from anywhere. First of all, at this point market structure was bullish. At this point market took out the liquidity of this point, so we can expect a move to the upside. And what can be the target? This point can be the target in the 4 hour time frame. But as you can see that in the 4 hour time frame market didn't sustain above the previous high, so we can see that there can be a short term reaction to the downside or for the long time. Market sweep this liquidity and move to the this low, so this point is our next liquidity point. Or you can also say that this can be the change of character because market has already swept the liquidity. Now after the change of character, you can see that market moves to the downside, and again at this point these pullbacks were the liquidity, market took out the liquidity and moves to the downside, and this point becomes the break of structure again. This is the higher time frame structure in the 4 hour. Now again this point is the liquidity, and after taking out the liquidity you can look for a sell, but market moves to the upside and close above this point. So this is the change of character in the 4 hour time frame, that the direction is now changed to the upside. Now again this is the change in direction, and at this point this was the liquidity, and if you are looking for a buy, then you can look for a buy when market took out the liquidity. Market took out the liquidity, tap on this imbalance at this point and you can look for a buy. Now market moves to the upside, a reaction to the upside, but then finally sells off. Why? Because market may have tap on the higher time frame POE at this point, and this is the sell side liquidity. Market took out this liquidity. Even though we are bullish, but in the counter trend we can see that market is respecting the higher time frames analysis also in the counter trend, so it becomes easier for us to take entries in the 15-minute time frame at this point, because we can get again the confirmation, and this point again becomes the change of character in the higher time frames. Now again market continue to move to the downside, and this was the liquidity point. Market took out the liquidity at this point, and this is the target in the higher time frames at this point. And again this was the liquidity area, market took out the liquidity, and this was the area where we can looking for a sell. This area can be the sell side area. Now again market tap on this point, gave a reaction to the downside, but then again failed it and moving higher in the 4 hour time frame, and this can be the liquidity point for the 4 hour time frame, and market when break below this point we can look for a buy. Now as you can see that this was the sell side area, market tap on it, gave a reaction but didn't create the break of structure at this point. Why this happens? Because this was not the higher time frame analysis. Because if we move to the daily time frame from this point, as you can see that this change of character in the 4 hour time frame is just the liquidity point in the daily time frame, and after taking out the liquidity, this was the unmitigated area where market has tapped at this point and moved to the upside. Because in trading you don't know what time frame market is going to respect, because market do not respect all the time frames all the time, so you have to be flexible, and you must accept that you can bear losses also, but you can control your risk. And if we go even lower, like in the 15-minute time frame, this is the 15-minute time frame, and this was the area where we have sold in the 4 hour time frame. But in the 15-minute time frame, this area was the in the 15-minute time frame, this area was the liquidity point in the 15-minute. Market took out the liquidity, moves to the upside, and this point becomes the break of structure. Now again, after the break of structure, this area becomes the liquidity point. Market took out the liquidity at this point and moves to the upside, and this point becomes the break of structure, but market didn't sustain above this point, so this is the liquidity grab. And when market break below this point, this becomes the change of character, because market has swept the liquidity of previous high and broke to the major low at this point, so this is the change of character. Market moves to the downside. Now when market moves to the downside, this area is the liquidity. Market took out the liquidity and this can be the target. Market hit the target at this point. Now if you can see that in the 15-minute direction, the 15-minute the direction is bearish and market can move to the downside after taking out the liquidity of this point, and this is the order block, or you can say that with imbalance PY, that market can move to the downside. But market failed this. Why? Because in the 4 hour time frame we are bullish at this point. Why? Because market hasn't tapped down the 4 hour time frame PY, and this was just the liquidity sweep in the 4 hour time frame. And in the same way, no matter which time frame you use, there are higher probability of market respecting the higher time frames of those higher time frames. For because of that, you must choose a time frame that is suitable for you, and you must also look for the higher time frames. Like if you are trading the swing trading, then you choose the 4 hour as your higher time frame and 15-minute for your entry time frame. Like if you are using the 15-minute for your higher time frame, then you can take the entries in the 1-minute time frame, but you should not look for the 1-minute entries only, because if we can see that this is the current price action, like this is a 1-minute time frame structure, market moves to the downside, so where you can look for a buy. Market hasn't taken out the liquidity, so you cannot look for a buy at those points. Now in the internal structure, this area was the liquidity point, market took it, you can look for a buy, this can be the target. Now again, where is the next liquidity point? Market didn't took out the liquidity till this point. Now this is the liquidity, market took it, and you can look for a buy. Market moves to the upside, and this is the break of structure. Okay, after the break of structure, you can see that market moves to the downside and break below the previous major low. So this can be the change of character in the 1-minute time frame. Now you are looking for a sell side, and you can see that this was the liquidity building at this point, and mostly people may have put their orders of sell side at this point, because this is the unmitigated order block, and market gave a reaction for the extra confirmation. Some people may have sold at this point, and this is your stop loss at this point, and target the low in the 1-minute time frame. But if you move to the higher time frame like the 15-minute time frame, so what's happening at this point? Market hasn't even closed the candle below the previous candle low in the 15-minute time frame. Why? Because this is the higher time frame liquidity point. In the lower time frame, where the change of character happens, in the higher time frame, this was just the liquidity, and whenever market took out the liquidity, it respects the higher time frame. So you should be looking for the buy at this point, not the sell, because market respect higher time frames or almost all the times as compared to the lower time frames. So thanks for watching this video. Please make sure to like and subscribe this channel.